Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. Today is September the 14th. Today's start of the day is Netflix. This is 30 minutes time frame, and we can see right here that the stock has started to decline, and we're calling the decline here as an impulse. You can see the extension lower looks and behaves like an impulsive structure here. If you see the extension, it is already more than 1.618, so this is obviously qualifies as an impulse, and we are looking for a bit more downside here with the 4 and a 5 to come before we finish the 5 ways down from here, and that should finish with E. From there we should be getting to this rally, and as long as we stay below 453 we should then extend lower again. So the bias here is to the downside, and we'll continue to see for the downside as long as it stays below 453 right here. Now if I zoom out to the 4 hour, now I'm putting in the X here. This is the X, right? So let's put down a bit more here, the C here. So it's an ABC ending the X, right? So this is the A and this is the B, and that means we have W here. So this is what we call a double zigzag, right? In which you have the first ABC pullback over here, and then the rally fails. So you have the initial correction, which is a zigzag, and it fails to extend to the upside. Instead, it's only doing a 3-ish rally and then going down again, and the move down looks pretty impulsive at the moment, even though we still need to break below the W again to confirm this. But at this point it looks pretty plausible, with the decline looking impulsive and the rally looking corrective. Okay, and in this kind of scenario, basically we're still calling for the downside as we saw in the 1 hour time frame before. So looking for a 5 ways down, right? 1, 2, 3, 4, 5, and that 5 ways down is going to be ending your first A leg of the zigzag. Then you will have a B rally, and then the B rally should fail below this X here, right? Below this 453 here, and should go down again afterwards. So it's a double zigzag. You have a zigzag here, and then you have another zigzag here, and that should be wrapping up your Y leg. So a couple of things here that we can sort of think about. If you are looking at the shorter cycle, then yes, it should be looking or be the bias is to the downside. As to the potential target lower, we could go as low as the 100% extension here. So which is 357 is the eventual possible target, but it's not just one specific level. It's between 357 and 300 basically. Okay, that will be the potential target on the downside. And if you look at the larger time frame, even though you're looking at lower, but this is not a bearish market, and the reason is simple, because this pullback over here was clearly 3 waves. So this in itself is already telling you this is not a bearish market, because if it is bearish, it would have been 1, 2 with a big extension, the 3rd wave, 3, 4, 5. That's a bearish market, right? But it is not. So it was only a 3 swing and then rally. So even though yes, we might get more downside, this is what we call a complex correction, right? A double zigzag is a complex correction basically, and even though we can see more downside, but it is still considered to be a corrective structure here, and then eventually we will finish and then starts to go higher again. Eventually we're going to break above here again, because the pullback was only 3 waves here in Netflix. Okay, so that's the idea here, and as always, if you want to get more updates, feel free to check our service. We have 14 days trial, and the link is in the description of the video. See you all again next time. Have a nice day, everyone.